7 Smart Ways to Save Tax for Salaried Employees. By making investments in select financial products and claiming deductions under certain allowances, one can reduce the taxable income. Deductions can be claimed on spends under life insurance premium paid, school fees, contribution to EPF, PPF, NSC, investments in ELSS, NPS. Some additional ways to reduce taxable incomes are by claiming tax exemption on car allowances, medical bills, rent payment, food coupons and leave travel allowance. However, there are other ways also to claim tax benefits and reduce your tax outgo every financial year. Car allowance income tax liability, when owned by the employee, is based on the purpose of use, private, official or both. Remember to submit bills on time to your employer, since this tax benefit can be claimed only through your employer. Rent payment, you can claim HRA if you are paying rent and living in a rented accommodation. HRA exemption is also available if you live with parents, you can pay them rent. But your parents must include this rental income in their tax return. Don't worry if you could not submit rent receipts to your employer in time, claim HRA exemption at the time of filing your tax return. It is always a good time to start planning towards tax savings for the financial year and then hurry up towards the end. Food coupons. These days, some employers also provide food coupons as part of your salary, which are exempt up to 55 rupees per day. Leave travel allowance. LTA or leave travel allowance can be used to save tax on fare expenses for a trip made within India. Your employer decides your pay structure, which may or may not include LTA. Exemption on LTA is a fare for the shortest distance between two places. This tax benefit can only be claimed via your employer, so remember to submit LTA bills on time. You could claim deduction on savings, investments and spends under life insurance premium paid, school fees, contribution to EPF, PPF, NSC, investments in ELSS, NPS,